Hey everyone, welcome in to another daily editorial here on the KE Report. We're chatting with Jordan Roy-Byrne. We're going to be focusing on silver, some of the recent chart action within silver when it went back and tested that $30 breakout level and rebounded quite strongly. Silver is even up a little bit today. More importantly, though, holding above $30 quite comfortably, over $32 right now. We'll also dive down into a little bit of historical references for silver breakouts and the stocks, if Jordan's seeing any life or what he is seeing in some of those charts, the ETFs that follow the silver stocks. Jordan is the founder and editor of the Daily Gold. Jordan, let's start off with silver. Simple breakout above $30, something that silver investors have been waiting for over a decade now. And I think even more importantly, that retest of that $30 level and very quick rebound above $30. What does this tell you, Jordan?
Well, it tells me that silver could be in breakout mode. Breakout mode is a term that I invented just after a market makes a significant breakout, and then the path of least resistance is higher, and there's really little resistance as the market can move aggressively higher at some points, but steadily higher over time. And so we'll have to see. I mean, silver it's possible it could retest 29 or 30 again. I mean, it's hard to know in the moment if just a retest for a day or two, if that's all that's needed. But yeah, silver's it's been really outperforming gold. I mean, it does have a measured upside target at 34.35. If you look at monthly and quarterly charts, 34, 35, 33, that area, there's lots of resistance. So silver, trading at the 32s today. I mean, it's possible it could run up and hit those levels pretty soon and then pull back some. But I think, looking at how silver performs after significant breakouts, looking at all these of the last 50, 60 years, I mean, it tends to stay like red hot and overbought. So I don't think we can completely rule out, another retest of 29 or 30. But judging from the recent price action and judging from history, I mean, silver could stay overbought and run hot for a while.
Well, Jordan, let's just pick it up there. I love it that silver can stay red hot and overbought. That's a great tagline right there. But you mentioned in a recent missive to your subscribers that when you were looking at breakouts and silver, post breakouts and looking historically at things going back to the 1970s, you were even surprised by how strong some of the moves can be. So maybe break down what you looked into historically and how other breakouts have gone in silver.
Yeah, there are some really significant moves here, even just measuring from the point of the breakout and ultimately how long the move lasted. And these are not particularly long moves. I'd have to go back and look at the time because I wasn't really focusing on the time. But I mean, there's, two or three of these moves are over 100%. There's, a few others that are in the 50% to 70% range. And this is from the point of the breakout. So if you're taking that and you're applying it to 29.30, I mean, you're at a minimum, you're getting into the 40s and close to 50. So there's that. But then at the same time, looking at the price action for gold typically corrects to the 50-day, 100-day, or 150-day. Those are the post-breakout corrections in gold. Now in silver, I just looked at the 100-day and the 150-day. Out of all these moves, there's basically only one that came close to testing the 100-day. So, and I think that was in the middle of the 2010 to the 2011 move. So again, this didn't test the 100-day. It came close to testing it. Aside from that, essentially all the other moves, the 50-day moving average was a support level. So this is a market that when it breaks out and when it gets going, it can run really hot and stay hot. And so, again, maybe there's a chance silver could retest 29 or 30 again. But other than that, once we see silver get going, if it can get to 32, 33 here, I mean, it could run really hot and stay that way for a while. I mean, again, maybe 34, 35, that's a target there. There's some resistance there. Probably see some selling there and silver can come back some after hitting that level. But just looking at this history and thinking about, how markets usually, for any market after a breakout, it's possible silver could run all the way to 50 before it, has a significant correction. Now, significant correction, I mean, I don't want to get too much into the weeds, but because people can define that differently. But yeah, I mean, it's, after everything that's happened, we're coming out of a cyclical bear, we're in a new secular bull and a new cyclical bull. And it seems ridiculous to see silver have this strong move. It makes a breakout. It's really overbought. And then to say, well, it's just going to stay really overbought and run hot for a while. No analyst wants to be that, perma bull type. But judging from the history, I mean, it's a pretty strong indication that could be what's coming. That, the odds are really high that this could run hot and stay that way for a while. And so if we're not going to see a big pullback at, 34, 35, then, potentially silver could just run really overbought and run hot until it gets to 50. And then at that point, it probably rests for at least a couple quarters, maybe 6-9 months.
Jordan, you mentioned that gold-silver ratio, so I pulled up that chart, and right now, the gold-silver ratio has dropped to a level we haven't seen since November of 2021. The lower this number, the better silver is doing, and people always look at around that 80 number as if it drops below, that really shows silver is outperforming and maybe a bull market upon us. What are you watching in that gold-silver ratio?
Okay, yeah, the gold-silver ratio, it did break. There was a trend line going back at least a few years. Well, depending on how you draw it, there's a trend line from 2021, or if you connect it from lows in 2022, there was a clear trend line break, and the first support target was around 75. So that's come down. I think as of yesterday, the ratio came down to 73. Basically, the breaking of that trend line, in the upper 70s, the next major support level is 65. So if we're thinking about the next, let's just call it the next 12 months, 65 is the next downside target for the gold-silver ratio. And you have support at 65 going back 10 years. There's a couple significant lows there. You have the 2016 low, and then you have the low in 2021, which was the peak of the last cyclical move, which was really short. But that was the peak. So again, we're in the low 70s now, and the next strong support for the gold-silver ratio is 65. So you could see this come down to 65 in the next 12 months. Now, given how quickly, if you look at the chart and see how quickly this thing moves, maybe it hits 65 in 3 months, or 4 or 5 months, or maybe even 2 months. I mean, I'm just pulling numbers out here as far as time, but that's how quick this thing can move when it gets going to the downside. So long story short, 65 should be the next target that everyone focuses on. If and when the ratio breaks below 65, that's obviously really significant for silver. I mean, I haven't thought about what kind of gold and silver prices that would correspond to, but at this point, 65 that's the real next downside target here, and the ratio has broken down in favor of silver. It's clearly broken down.
Yeah, Jordan, it's nice to see, and a lot of people have been watching to see if the 80 level would finally break, because for a while it was hovering above 80 and even sometimes getting closer to 90. And now that it's breaking down in silver's favor and silver starting to gain on gold, we've seen some corresponding action in the stocks, not just the silver stocks, but also the gold stocks, because there's so much speculative money that tracks the moves in silver. And there's really a tighter correlation between silver and the mining stocks than there even is between gold and the mining stocks. So let's look at something like SILJ, which is really the more speculative side of the ETF as far as the four. And when you look at SILJ, there's a lot of lateral pricing support we were talking about before this call. Let's just call it in the very low 12s. There was like 5 or 6 peaks that were in like the 1205 to 1220 range. And SILJ recently blasted up to above 13. Are you encouraged when you see lateral pricing support taken out like that on a solid move?
Yes, I'm encouraged by the action in SILJ, but just specifically all of the miners ETFs. And I'm not, honestly not that surprised, because, people have been bitching about the lack of performance from the miners for years and years. But again, this is simple. I mean, this is a math equation where in recent years, metals prices were not going up and costs were going through the roof. Now, towards the end of last year, valuations started coming down significantly. So that's what caused these big declines in all these stocks. And if you really want the miners to outperform gold and silver, the gold stocks outperform gold, silver stocks outperform silver, you need breakouts in the metals prices because that's what gives the metals prices a chance to really run and really accelerate. And that's when fundamentally you get margins just suddenly expanding significantly. And that's how and why and when you get the stocks really outperforming the metals. And so, gold breaks 2100 and, the stocks are flying. Gold keeps moving up. We're seeing money trickle down into, lower quality things. Silver breaks 26. Silver stocks start moving. Silver breaks 29.30. Silver stocks are really running. So, I'm not surprised by what's happened, but yes, it is encouraging to see that this relationship is playing out again, even if it was expected. But yes, as far as SILJ, nice break above the resistance there, below 12. You could potentially have a measured upside target of, 16 and a half. So that's certainly possible. Looking at the, the action here and now, we are a little overbought in the short term. And that's what makes this really, really tricky because it's really hard to buy these markets when they've already rallied, 20, 30, 40%. They're overbought. Yet at the same time, everything you're looking at leads you to think, they could correct a little bit, but I still think these are going to go higher before there's any real significant correction. So that's the difficult juncture that we're in, to which I always say, don't worry about the sector, just focus on the individual stocks, individual companies. And look, you're probably going to be able to find something that, maybe it's not as overbought and it still has really good value at this level. That's what people should be looking at rather than something that, again, we talked about this a month ago. It has a rhino horn on the chart because it's gone straight up the last month or two. Like those are the ones you want to hold off on. You want to look at the things that are not as overbought. There's still some quality there, and there's still really good value based on current metals prices.
Yeah, Jordan, to your point about just how strong it's rallied, SILJ is up 11 of the last 14 weeks and on high volume, too. I know you don't follow volume that closely, but all of that is encouraging. Your comments, though, in terms of not necessarily chasing some of these stocks, what if you find a silver stock or even, let's say, a gold stock that really hasn't moved? It's maybe up 10, 20% while the rest of the market is much, much higher. The stock doesn't have that rhino horn. Does that attract you then, or could that scare you away because maybe there is some flaw with that stock that it just simply is not joining in on this rally where a lot of stocks are joining in?
Yeah, that's a really good question because you have to differentiate between something that has a significant or serious flaw versus something that maybe it's a pretty good company, their assets are fine, and they just need a better market, but there isn't like some huge flaw with their assets. That's the kind of thing you need to differentiate between, and there's no easy answer to what you're asking, but that's what I would say. And again, you have to look at these things on a case by case basis. You can't just like have a certain criteria and that's going to apply to like all these specific stocks. There can be tons of reasons why a stock is lagging. Maybe the company needs to raise money and the market's waiting for that. Maybe the company, its asset is just going to be an orphan. Maybe it's like a big project, but it's just there's too much money to move it forward and the economics are not that great of the project. So people are they're selling, they're leaving that stock. There can also be political risk. There could be numerous reasons why stocks are in the current context or setting that you're talking about, where they haven't really moved that much, they're lagging. And so for me, I'm trying to look at and find the ones that have the flaws that we could say they might go away in a bull market or with higher metals prices. So there's optionality plays a big role in that. But yeah, you have to be careful because there usually is a reason why these stocks are underperforming. And most like retail and amateur investors, they won't understand those reasons. It's not clear. But if you talk to somebody who's been following the market for decades, like they'll know in 5 seconds like what the problem is. So that, I mean, again, that's something for me personally, it's something I didn't really start to learn and pick up on until the last couple of years. I mean, some of these answers, like I had no clue like 5 or 10 years ago. So you have to evaluate everything on a case by case basis. But I mean, it's really tough to express an answer here that can, help the entire audience because it comes down to some little things here and there. And these can be completely different for different companies.
All right, Jordan, we'll wrap it up here. Thank you very much for your insights on the silver market. Look, it's encouraging what we're seeing almost across the board in resources, commodities, and now even the underlying stocks. All we do is keep watching some of these retests and the stocks moving higher. As you said, be selective in your stocks. But I think right now, probably one of the most important things is make sure you're not being too cute because there are some gains that have been had and potentially some more upside when you compare where these stocks stand compared to where the underlying metals prices are. Jordan, thank you as always for your time. We'll post a link to the Daily Gold website and we'll chat with you next week. Thanks, Jordan.